Hi and welcome to the weekly roundup for the week ending Friday the 27th of August. And we hope that you are enjoying these weekly reports, so please do subscribe to receive regular stock market content. And of course, any questions, please pop them in the comments section below. We would love to hear from you. And finally, we invite you to follow our free stock market reports on tech stocks, banking stocks, and IPOs using the link in the descriptions below. Well, it's been a relatively quiet week with focus squarely on Fed Chair Jerome Powell's keynote speech this afternoon at the Jackson Hole Symposium. Investors have been flip-flopping all week over whether the Fed will make any announcement over tapering bond purchases or whether the can will be kicked yet further down the road amidst concerns over rising COVID cases. Whilst indices reached record highs earlier in the week, sentiment softened as the event approached. US GDP for the second quarter was upwardly revised to 6.6% year-on-year from 6.5%. However, this was short of the 6.7% forecast. The Dow is set to finish the week flat, the S&P up 0.6%, and Nasdaq is set to rally 1.5%. The jump in the Nasdaq is thanks to a rise in Chinese-listed tech stocks on expectations that the regulatory crackdown from Beijing could ease. In Europe, the FTSE is set to gain 0.5%, whilst the DAX expected to shed 0.1% after IFO business sentiment, GfK consumer sentiment and German manufacturing PMI data came in weaker than forecast. Supply chain bottlenecks and rising COVID cases mean that the German economic recovery is losing momentum. On the exchanges, the US dollar index is set for weekly losses in the region of 0.4%. Whilst the greenback fell for 3 straight sessions at the start of the week, demand has picked up slightly amidst the start of the Jackson Hole Symposium and more hawkish Fed chatter. The pound against the dollar is on track for 0.5% gains across the week as the pound shrugs off rising COVID cases and supply chain issues stemming from Brexit. Likewise, the euro is also set to book gains in the region of 0.5% against the dollar this week, rebounding after steep losses in the previous week. The euro pushed higher despite a hat-trick of weak data from Germany and despite dovish comments from ECB chief economist Philip Lane, who considers that it is too early for the ECB to consider reining in support. In commodities, after crashing just shy of 9% lower last week, oil has pretty much clawed back those losses this week and is set to gain over 8.5% across the week. The weaker US dollar, combined with China singing victory against its latest COVID wave, plus a 25% drop in Mexico's production after a platform fire, helped boost Brent back over the $70 a barrel mark, overshadowing concerns of rising COVID cases elsewhere across the globe. Gold is up 0.6% so far this week, marking its 3rd straight week of gains. The precious metal benefited across the week from safe haven flows amidst rising COVID cases and a weaker US dollar. Expectations that the Fed will delay an announcement regarding tightening monetary policy underpinned non-yielding gold. In the UK, we saw a rally. Not just any rally. Yes, the Marks & Spencer share price rally shows no signs of letting up. The retailer surged another 9% so far this week, adding to 10% last week, and the stocks trade up a whopping 32% across August at an 18-month high. The latest jump higher comes following analysts heaping praise on the stock. Credit Suisse and Berenberg both raised their target price to 215 pence and 200 pence respectively. Sticking with supermarkets, Sainsbury's surged over 8% across the week, hitting a 7-year high on takeover chatter. The share price charged higher on rumours that US private equity firm Apollo is considering a £7 billion offer for the chain. The share price gained 15% on Monday as those rumours surfaced. However, the share price has come off those highs as that rumour fades. Over in the US, the US-listed Chinese tech firm JD.com jumped 21% across the week after regulation panic eases, and after revealing strong revenue and user growth in Q2, beating expectations. Cathie Wood's ARK investment also snapped up the stock earlier in the week, driving up that interest. And that's it for the week. As always, thanks very much for watching. Please don't forget to subscribe, and of course, if you have any questions, just pop them in the comments section below. In the meantime, from all of us here at Atlantic Capital Markets, have a great long weekend.